This is third anniversary for Investor Inspiration. I've been doing this for 3 years with Investor Inspiration. I've done probably well over 100 of these presentations with Investor Inspiration. So really looking forward to keep moving forward and doing these types of presentations. But let's go ahead. I got a lot to go over here. I only have a short amount of time. Before we jump in, I just want to let everybody know that there is risk in investing. Hold on one second. My slides here. There we go. Once again, we're all adults here. You shouldn't invest money that you can't afford to lose, but you should always trade with proper equity management in mind. Now, it is highly recommended you go through our entire education and become trading as an educated and knowledgeable trader. Now, everything I show you here today, do not take this as actual investment advice. I'm about to pull up my charts here in just a second. I'm actually going to show you a trade opportunity that I'm looking at taking. I'm actually going to teach you a trading strategy here today, but ultimately, when it does come time for you to place a trade, that decision to make that trade is going to be yours and yours alone. So just to set some agenda here, yeah, Jimmy's saying I just had MTI this morning. Jimmy, this is going to be a little bit different. I'm actually going to show you something very neat here. But actually, one of the neat things about this, everything I'm showing you here today, everything I'm going to demonstrate for you here today, you're actually going to be able to take it for a test drive for less than the cost of a pack of gum here. So I know everybody's been here. You've been through a lot of presentations here today. Actually, there's something to show you here today. Very easy to get involved with this here and take it for a test drive to see if the Forex market is for you. In fact, actually, what I'm showing you here today, I kind of call this my Forex quick start because I'm actually going to go in, demonstrate our charting platform here, teach you trading strategy. I'll show you how to actually set up a demo account so you can actually literally start doing the same trading strategy I'm going to show you here today. You can actually start doing this tomorrow. Actually Monday morning when the market, when these trade setups present themselves. So what I'm going to do is I'm going to quickly get everybody up to speed here today. I'm sure there's many of you here in the room, you probably don't know what the Forex market is. Don't worry, I'm going to very quickly get you up to speed, give you an overview of what the Forex market is. Then we will go to the charts. I will show you some basic analysis utilizing our charts. I'll show you some of the nice built-in features. We do have an auto Fibonacci tool, an auto trendline tool. We have auto King's Crown tools, support resistance. I'll show you how to do some basic analysis with that. I'll actually show you that current trade opportunity that I'm looking at taking, explain to you why I'm looking at taking that opportunity. When I go over all the basics here, I'll show you some basic analysis, then we'll go back into the charts, and then I'll teach you what's called the London Daybreak trading strategy. Very simple trading strategy that even after today, after the 45 minutes with you, when you're here with me here today, you'll be able to start implementing it. But I also explained to everybody here that this London Daybreak trading strategy, I'm going to kind of give you a Cliff Notes version of it here today. You're actually going to get to learn the actual trading strategy from the gentleman that created it. I'll explain that here in just a second. As I explained, I'll also show you how to set up a demo trading account. Plus, I'll show you how you can take our charting platform here for a test drive. Once again, less than the cost of a pack of gum here today. And we'll even give you a couple free bonuses to go along with that as well. So before we jump in, Renee already kind of gave you a little bit about my background, but I have been trading in the investment market since 1998. Was pretty much stocks and options up until about 3 years ago, when I joined MTI as a student. I was then brought on board after I learned the education, and then they then started asking me to do these presentations. So I actually, in my history, I've worked for several different financial companies. In the past, I did help start, launch, and build an entirely new financial services company from the ground up here. And I am a full-time active trader, and as mentioned, I am a student Market Traders Institute. So everything I'm showing you here today, I actually have learned from Market Traders Institute. So those of you, if you weren't with my colleague here, Joe Cavallaro, at the beginning of this Investor Inspiration webinar here today, let me just go ahead and quickly introduce you to who Market Traders is. I actually just came today. We just had our company fall picnic here, nice little event here, but the building you see on your screen right here, this is actually our building. We have a 70,000 training facility here in Orlando, Florida. We have classrooms. You can actually come to our building, get trained live in classrooms right here in Orlando, right from the same people who taught me and have trained thousands of traders around the world here. One of the other neat things about Market Traders Institute, we've been around for about over 22, coming up on 23 years. The other things about us, we're getting a lot of press. You see some of the accolades we've gotten here. In fact, some of you probably might recognize this logo right here, Inc. Magazine. Last year, 2015, MTI was ranked as 1,180 on Inc. 5000's 2015's fastest growing companies. Now, we're actually happy to announce that for For 2016, we moved up to 592. We did get this nice letter here from Inc. Magazine letting us know that we are along the same ranks as Zappos, Under Armour, Microsoft, just to name some of the companies. Now, the reason we got on this list is because we are helping our students and our clients here get results in this market. The only reason we're going to be able to remain on this list is if we keep delivering those results for our students. One of the things before we jump into the charts here, I do want to introduce you to someone here because not only does MTI have some of the best training facilities in the training programs, we also have some of the best trainers and analysts here. The one I want to introduce you to, his name is Joshua Martinez. There's probably a lot of you here that have probably heard of Josh before. He goes by the handle FX Pathfinder. May have heard of him before, but the reason I want to talk about Josh is because he is the creator of the trading strategy I'm about to show you here in just a second here. But a little bit about his background here. He is one of MTI's product experts. He has trained thousands of Forex investors. He actually started off trading. He had an initial deposit investment of $500 in his trading account. He ended up generating over $39,000 in profit off of that. So he's been doing this for several years. He's made thousands of Forex investments, published author, and like I said, he is the creator of this trading strategy I'm going to show you here today. Before we jump in, to kind of give you a little bit of third-party results here, some third-party verification of the type of results Josh is getting here. This was just from a couple weeks ago. He updated his trading account here. And this is just for actually for 2016. For 2016, he's up about 31% so far. He's captured about 25,000 pips. I think he's actually has captured a little bit more than that. I think his goal is he's going after capturing 30,000 pips this year in the Forex market here. So kind of give you this idea here. This on MyFX book, third-party verified here. These are the type of results that Josh is getting. And like I said, he is the creator of the trading strategy I'm about to show you here, this London Daybreak trading strategy. Now, I'm going to give you a Cliff Notes version of this trading strategy here today, but as part of this program I'm about to give you here today, you're also going to get an actual video. I'm going to go ahead and pull that up before we jump into the market here. Where is it? Right here. You'll actually get a training video from Josh going into much greater detail about this here. So I'm going to kind of go through this. I don't have a lot of time to go into a lot of detail. A lot of the details will be discussed by Josh here in that video that you'll get access to as well. So what I want to do is before we jump in right now, what I want to do is I want to get every idea of everybody's trading experience in the Forex market. Because I'm going to spend a lot of time going over a lot of the Forex market if everybody already knows a lot about it. So I'm trying to put this in your hands here today. I don't want to go over a lot of stuff if you already know a lot about it here. So if I could just quickly look at the screen, quickly follow the instructions here. If you could just go ahead, type in 1 if you're brand new to the Forex market. That let me know you have no experience in this market whatsoever. Type in number 2, maybe you have a little bit of experience. Maybe you tried a demo account. Maybe you've been to a couple seminars before. Number 3 is for those experienced traders here. If you are actively live trading in the Forex market, like myself here. So yeah, okay. So yeah, pretty much here, like a lot of these sessions here, I just got about 30 or 40 ones here. I did have a couple number 2s here. Somebody looks like some of you are trading a little bit demos here, and I do have a number 3. I have one number 3, Simon. Looks like everybody else is a 1 or 2. So great. I greatly appreciate everybody doing that. It kind of gives me an idea of where everybody is here today. So let's go ahead. Let's get started. Before we jump in, I show you that trading strategy. What I'm going to do is kind of show you what we're going to be discussing as far as the Forex market. What I'm going to do is I'm going to get you up to speed here. Oops, why are my slide? There we go. I'm going to start off by explaining to you what you're doing when you're trading Forex currencies. I'm also going to show you what are pips and why you want them. I mentioned Josh is going after 30,000 pips this year. Some of you might be scratching your heads. Don't worry. I'll explain to you what a pip here is in just a second. And also, the most important thing, where do I start? Like I said, I'm kind of giving you my little Forex startup kit here. I'm going to put this charting software in your hands here today, teach you a trading strategy. I teach you some basic analysis so that you literally start actually trading this market here today. So let's go ahead before we jump in. Once again, take a moment or two to go over what the Forex market is. For those of you that don't know, the Forex market, it is the largest financial market. There's over $5 trillion daily traded in this market each and every day. So imagine an opportunity to go after just a fraction of a fraction of a fraction of that. That's what we're trying to do in this market here. It's also a very liquid market, which means you can get in and out very quickly in this market. There's also a lot of opportunity in this market as well. Now, one more quick thing about the Forex market, as far as flexibility in the market, there's three major trading sessions that happen in the Forex market. This is going to pertain to that trading strategy I'm about to show you here in just a second. You have the Asian trading session, you have the London trading session, and then you have the U.S. trading session, the New York trading session. These sessions, they overlap. They're about, I think, about 8 hours long, each one of them. They each overlap. So the neat thing about that is that because they overlap, you can actually trade this market 24 hours a day, starting at 5 o'clock tomorrow at 5 o'clock p.m. Eastern Time, all the way through 5 o'clock p.m. on Friday Eastern Time here today. So I'll come back and I'll explain to you here in just a second how those trading sessions pertain to what I'm about to show you here. The other neat thing about the Forex market, unlike the stock market, if you're like me, if you're a stock trader as well, you know there's over 40,000 different stocks you can watch and trade. The neat thing about the Forex market is there's really only about 60 different currency pairs that you can trade. The neat thing about this is that because MTI has almost 23 years of experience in this market, we're going to show you which ones to pay the most attention to, and we'll also teach you the secrets to trading them. In fact, when I pull up my charts here, you'll see that I focus on about 18 different currency pairs here. With the trading strategy I'm going to show you here today, we're going to focus on 6. So we're going to narrow this down all the way just to 6 currency pairs to watch here. Now, the neat thing about the surge, I actually just talked to you about candlesticks. But what I'm going to pull up here, for those of you that are not familiar, I'm going to be pulling up my charts, and what it is called a candlestick chart. So I appreciate Serge already kind of giving you guys a heads up on this. I'm not going to go into a lot of detail explaining candlesticks, but I do want to kind of give you an overview and show you what the charts mean when I pull them up. In the upper left-hand corner of our chart, you're going to see the currency pair. In this case here, it's the Great British Pound, GBP, versus the U.S. dollar, USD. It's the pound U.S. dollar currency pair. And what we're doing in this market is we're essentially trading one country's currency against another in an attempt to figure out which one's going to gain in value against the other. So on this chart here, let's just say in this chart here, with the pound versus the dollar, as the market's going up, the pound is gaining in value versus the dollar. When the market's going down, the U.S. dollar is gaining value on the pound. The pound's losing dollar as it's going down here. The other thing about this, like I said, you're looking at a candlestick chart. We do teach our students how to trade candlesticks here. These candlesticks, fortunately, Serge just gave you an overview here, but what they do is these candlesticks, they measure what the market has done in whatever time frame you select on your charts here. So the neat thing about this, on our charts, they default to white as your bullish candlesticks, and you have dark blue as your bearish. And when we go to the charts, I'll show you how you can actually change the color of these if you would like to change them to a different color. But for those of you that are brand new here today, all you really need to know is that the white candlesticks, they mean the market's going up. Dark blue means that the market is going down. Up white is bullish, dark blue is bearish here. One of the things I want to point out also is that next to the currency pair at the top here, you're going to see a time frame for your chart. In this case here, we're going to be using a 1-hour chart for the trading strategy I'm about to show you. So what that's going to mean is that each one of these candlesticks is going to represent what the market has done in 1 hour. So that means in that 1 hour, the white candlestick means that the market went up. In that 1 hour here, the dark blue one means the market is going to be going down. Now, another thing we're going to teach you is we're going to teach you how to use candlestick formations. These candlesticks are form these candlestick formations, and they're kind of like the sign language of the market, kind of like Serge was talking about here. And we use them as a trader to help us to look for U-turns in this market and help to look to see where this market's going here. In the bottom left-hand corner, you have a Morningstar candlestick formation, basically telling the trader, hey, look to see for this market to U-turn and go upward in a bullish movement. You have a candlestick formation at the top here. It's called an Evening Star candlestick formation. It's a bearish candlestick formation. This is telling the trader to look for the market to U-turn and go downward in a bearish movement here. And the neat thing about this is that I'm actually going to show you here on our charts how the charts can actually pinpoint these here. Can I give you indicators showing you these different candlestick formations actually live in the charts here? One more quick thing we need to know before we jump in. As I mentioned before, what we're trying to do in this market is we're trying to capture what are called pips. Now, PIP is an acronym, PIP. It stands for price, interest, point. Now, I'm sure most, if not all of you here in the room, you probably already know that there are 100 pennies in a US dollar. A penny, it represents 1/100th of a US dollar. If we were looking for a unit of measure that is smaller than a penny, it would be the equivalent to what is called a pip. Just as there are 100 pennies in a US dollar, there are 100 pips in a penny. So if you look at this number here, the first two numbers behind the decimal point, these are your pennies. The next two numbers, these are your pips. So just as a penny represents 1/100th of a dollar, a pip, it represents 1/100th of a penny. So kind of got all the basics down now. What I'm going to do is I'm going to go in right now is I'm going to show you here. I'm going to show you here how to actually do your first Forex transaction. We'll break this down to the very basics of the Forex market here, because I'm sure most of you, if you travel outside the country, you've probably used one of these kiosks here, one of these currency exchange kiosks. So let me give you an example here. Let's just say that we're here in the United States, and let's say that in the morning we are going to travel to Canada. As before we go into Canada, we're going to exchange our US dollars for Canadian dollars. In this case here, the US dollar Canadian dollar exchange rate is 1.32, $1.32. So what that means is that each one of our US dollars is going to be worth 1.32 Canadian dollars. So if we were to exchange 1,000 US dollars, we would get back 1,320 Canadian dollars. So right there, very basic. You just did your first currency exchange here. We just exchanged our US dollars for Canadian dollars. Now, let's just say that we go to Canada throughout the day. At the end of the day, we come back in the evening, and then in the morning, the US dollar Canadian dollar exchange rate was 1.32. In the evening, let's say we're coming back in the United States, the exchange rate is now 1.33. It went up 1 penny. So that means our 1,000 US dollars now are going to be worth 1,330 Canadian dollars. So basically what that means is that we just made a $10 profit off of that right there. So once again, these are all very basic. These are very basic Forex transactions here, currency transactions here, because we're basically exchanging our currencies between the two here. I'm actually going to show you in the Forex market how we actually do this here a little bit differently here. But the Forex market, that 1 penny move, like I just said, is going to be worth 100 pips. So you would have just captured, when you exchanged your Canadian dollars back for US dollars, you just captured effectively 100 pips on that 1 penny move. Now, to get an idea of what that penny, that 100 pips is going to be worth, in the Forex market, we utilize leverage. This leverage is going to be provided by your broker. This is going to allow you to place the trades, and it's also going to allow you to capture those pips here. So let me give you an idea of the three basic trading lot sizes that we use here. In the Forex market, we trade in lots. You have what's called a micro lot. Now, a micro lot, it's about a $20 investment from your trading account. Your broker borrows this investment size. It allows you to place the trade and to go after those pips here. And now with a micro lot, each pip is going to be worth 10 cents. So those 100 pips you just captured, if you were trading a micro lot in the Forex market, it would be worth about $10. Now, a mini lot is about a $200 investment from your trading account. Each pip is then going to be worth $1 about. So those 100 pips would be worth about $100. So effectively here, what we're going to show you here is we kind of refer to a micro lot as crawling. We'll get you up to speed, trading in the market, you start crawling. With a mini lot, you're kind of now up and walking. Now, with a standard lot, this is where you start running in this market here. A standard lot, and this is the standard by which most traders strive to achieve, it's about a $2,000 investment from your trading account. Each pip is now going to be worth $10. So that 100 pips you just captured, it would be worth $1,000. So that's the neat thing about our education. In fact, actually, what I'm going to show you here today is to even go beyond this, to set up a demo account where you can actually use play money to practice trading the Forex market before you even enter in with a micro lot. But most of you, if you're brand new, you'll probably start off with a demo account. You'll then go to a micro lot, invest a little bit of money in your trading account. Then you'll build that up to the point where you're trading a mini lot. Then you build that up to the point where you're trading a standard lot here. We have trading strategies to help get you there, and we have profit plans to help get you through each one of these phases here. So what I'm going to do is let's go ahead, let's jump in. We're about to start talking about that London Daybreak trading strategy here in just a second. The London Daybreak trading strategy, it's going to be a very simple trading strategy here. It's going to utilize these 6 currency pairs you see on your screen. It's going to utilize the Great British Pound Canadian dollar, Great British Pound US dollar, Great British Pound Japanese yen, Great British Pound Swiss franc, Great British Pound New Zealand dollar, and the Great British Pound Australian dollar. So probably most of you can probably already see that each one of these are going to be British Pound based right there. So Yeah, these are going to be based, and we're going to be doing them, trading these during the London session. We'll go into a little more detail here in just a second. Now, our goal is going to be a very simple trading strategy. Our goal with the strategy I'm going to show you is to simply go after 50 pips per currency pair per day. And I'm going to give you the Cliff Notes version of this, but Josh is going to come back in that video, and he'll detail this a little bit more for you here. But I'm going to try to answer as many questions as I can as we're going through this here. So let's go ahead, let's go in. I know some of you, you're looking forward to this. Let's go ahead and come in. I'll come back in here. This is a trade setup I'm looking at. The neat thing about our charting platform is that we have a lot of neat built-in features here. Our charting platform, this is going to be part of what I'm showing you here today. You're going to be able to take this for a test drive as well. You don't have to be a student. If you were with my colleague Joe earlier, you don't have to actually become a student market trader. It's to take advantage of this here today to get into what I'm showing you here today. Once again, this is going to be very affordable. It's going to be costing you less than the cost of a pack of gum, or about the cost of a pack of gum, to actually take all this for a test drive. Get all this education I'm going to show you and get all this here today. So this trade I'm looking at right now, I'll try to come back in here a little bit later and show you this. I want to show everybody that London Daybreak trading strategy first. But basically, in the Forex market, as part of our trading strategy, there's three things we're going to be looking to do. Number one, we need to figure out where is the market going. We need to determine whether it's going up or whether it's going down. Number two, we need to determine where and why to get into the trade. And then number three, we need to determine where and why to get out of the trade. Three basic questions here. Now, we'll teach you analysis. In fact, here's some basic analysis you see on your screen right here. What I've done, this is on the Great British Pound Australian dollar, and this is on a 2-hour time frame. I'll explain a little bit here why I'm looking at a 2-hour time frame. But as you can see here, I've drawn these lines. These lines are called trend lines. What we found is that the market moves in waves. You can see here it comes down, goes up, goes down, and in between these movements are these little waves here. So what we use trend lines to help us determine, give us an educated opinion as to which way the market's going here. When the market's below this trend line, you're in the sell zone. You're going to continue selling this market until then it rallies up and breaks above your trend line into the buy zone. Then you'll buy until then it breaks down back again, and then you'll sell until it comes back up above that trend line here. So at this point right now, this is where the current market is. Obviously, the market's closed over the weekend here, but when it closed on Friday, this is where it left off here. So utilizing trend lines are going to help us to answer question number one. Where's the market going? Are we either above or below those trend lines? Now, we'll teach you how to draw these trend lines, but here's the neat thing about this. The neat thing about this is that we do have these automated tools. So for some reason, we don't know whether we're drawing these accurately. We can come in here with our smart trend line tool. We come here to the beginning of each one of these new trends, and then bam, it'll come in here and it can draw these automatically for us, just like that. So very simple. If you can determine where these new trends are beginning, just like this, you come in, you can draw your trend lines like this. Now, to take advantage and to answer questions number 2 and 3, where to get in and where to get out, let me just back this up here. We'll come over here to the beginning of this new trend. And once again, this is all just going to be very basic here today. I'm not going to go into a lot of detail about all this here, but I just want to kind of show you how you can use the charts here to do some basic analysis on them. Now, we came down here. On this one here, the market came down and broke our trend line, so we'd be looking for a buying opportunity. Now, what we have found is the market, let me bring this down just a little bit here. I'll move this over. Let's move this over just like this. There we go. Now I'll move it over here. Let's just move this over. There we go. What we found is that the market tends to move. Let me pull this down just a little bit more so I can demonstrate this for everybody here. I think some of the other people here actually have all demonstrated this as well. But what we have found is the market moves in these waves. When it's going up, it's going to be moving in we call an A, B, C, D pattern. Just like that. Oh, there we go. A, B, C, D. As it's going up, it's going to be making higher highs and higher lows. When it's coming down, we're going to look at that same A, B, C, D pattern. Just like this. A, B, C, D. And that's one thing I saw you might be scratching your head wondering how can you trade this market when it's going down. Just like with stocks, you can short the market. You can short the Forex market just like can in stocks. And we'll teach you how to do that as well by using this A, B, C, D pattern just like that, A, B, C, D. Now, what we're going to be looking for is initially to find this A to B boundary here, because when we find this A to B boundary, I'm going to show you here in just a second some very simple ways of finding this. We can come in and we can spread our Fibonacci tool. I think some of the other presenters already talked to you about this here. One of the neat things about our Fibonacci tool is that it's color-coded. These lines in between the A and B boundary, these are called retracement lines. What we have found is that in between this A and B boundary, there is a high probability that the market's going to retrace. So what we're looking for is we're looking for the market to retrace to a certain point and then U-turn. Now this U-turn is where our C point's going to be. We're going to be using that to determine our D point here. And we use this Fibonacci tool to determine that. Now these numbers here, don't worry about the numbers right now, just focus on the colors. So what we've done is we've color coordinated our Fibonacci's. These retracement lines, they coordinate to the lines above the B level. What we have found is that the market, it tends to retrace and then extend. These lines above the B level are called extension lines. So if you can match colors, red to red, blue to blue, and green to green, very simple to use this Fibonacci tool. If the market pulls back and forms its C point right here, forms that U-turn here, and we buy into the market after that U-turn, we're going to be looking to exit at the red extension, like a buddy system, red to red. If it pulls back and forms that C point at the blue retracement, and we buy into the market after that U-turn, we're going to exit at the blue to blue. And of course, green goes to green just like that here. The same thing happens when the market's going down. You can spread your Fibonacci's from the A to the B just like that here. So when the market's going up and when it's going down. Now, we come back into the market, and let me just give you a quick example and show you how this would actually work. Let me delete some of this, get this out of the way, not to distract you. So for instance here, when the market, it broke above our trend line, we would then be looking for buying opportunities. This point right here, this low point right here, this is going to be my A point. Now I'll give you a very, very basic explanation why this is the A point. It's the lowest point, and it has two candles to the left, to the right, which are higher. It's also called a proper low. So we have an A, the market then rallies up to this point right here. This is going to be our B. Now the reason this is our B is because this is what's called a proper high. That candlestick high point right here, that wick, it has two candles to the left, to the right, which are lower here. So we just determined that new upward A to B boundary. And like I said, when we find that A to B boundary, we can come in here and spread that Fibonacci tool from the A to the B just like that. So we said there's a high probability of a pullback in between the A and B boundary. What happens? The market does in fact pull back. It retraces. It pulls back to, oops, went too far, to this point right here. Now this candlestick right here, some of you have already started asking here, why are these candlesticks different colors? Didn't you just say a couple minutes ago, William, that all we really need to know here are the white and blue? Here's another neat thing about our charting platform. Just like Serge was telling you here just a second ago about candlesticks, we can actually have the charting here. It can come in here and highlight these here. So we can either turn this off, or if you do like I do, I leave this on. Oops. And you can go ahead and turn on all your candlesticks. So in this case right here, your green ones are going to be your bullish candlesticks. You have an engulfing bullish candlestick. Another engulfing bullish candlestick. In fact, what happens right here is the market pulls back. In fact, actually what it does right here, we'll teach you how to do this as well. It breaks a counter trend line. So you have a little bit of convergence here. The market pulls back to at least our top red retracement level. This is something I'll get into here in just a second. We look for the market to at least pull back to this top red retracement level. In this case here, it pulls back, U-turns, and gives me this engulfing bullish candlestick. So if I were looking for a buying opportunity, it would be right here at the close of that candlestick. It broke our counter trend line, candlestick formation, I'd be looking to buy right there. Now at this point, this is our C point. Right now, this would be our C point at a red retracement level. So what that means is that I'd be looking to exit this position at the D. In this case right here, the red extension here. We would set our limit right there. Now, as far as stop loss, if you're wondering about a stop loss, here's a couple different ways of doing this. We can either set a stop loss about 10 to 15 pips below this U-turn, or you can set it below the A. The safest place is below the A. or you can set it up about 10 to 15 pips below this. I generally do 10 to 15 pips below the U-turn. Unless I'm looking for more of a long-term position, I'll set it down below the A. Just want to kind of give you an idea, explain to you, we do teach how to set stop losses as well. With the trading strategy, I'm going to show you here in just a second. I'll show you how we set our stop losses with that trading strategy. But in this case here, we'd be buying at the close of that candlestick, and watch what happens here. The market rallies up, moves a little bit sideways, moving in these waves. We hold our position until right there, until right there, bam, it hits our D. Now, in this case, if we bought into the market right here at the close of that candlestick, and we exit at our limit at the D right there, that would have been 235 pips of movement right there. Now, another neat thing about this, something I didn't get a chance to talk about, is that we also have the ability to do trading directly from the charts. We can teach you and show you how to do trading right from our charts. But what I want to do is right now is let's come in here. I just showed you the manual way of drawing these Fibonacci's. I'm going to show you something that's even easier. Let's come in, let's delete all this here. I think my colleague Joe may have showed you this as well. But the thing is that we would have to run our Fibonacci's the whole way up. A, B, C, D, A, B, C, D, A, B, C, D. Here's all we need to do. We have what's called our Auto Fibonacci tool. It's called our Smart Fibonacci tool. We click on this. We come here to the beginning of that new trend, and all we have to do is simply just click on that. And it's going to draw our Fibonacci's automatically for us. So you don't even have to find those A and B's. You simply just go ahead and do this just like that. So what it's going to do is going to run our Fibonacci's the whole way up, that upward bullish movement, and we'll continue buying these A, B, C, D movements until the market pulls down below our smart trend line. And right here then the market then goes below that trend line. So once it's below that trend line, we're now looking to sell the market. So we would then come in here at this new high point right there, and we can do the same thing right there. We hit our smart Fibonacci's right there, and it's going to draw our Fibonacci's the whole way down. And once again, you're simply doing ABCDs as it's going down until the market then comes back up and breaks above our trend line, which brings us now to where the current market is right here. The market then pulled back, and now we're above that trend line. In fact, what I'm going to do is I'm going to go ahead and change the color of this. I prefer to make these light blue for bullish trend lines, and we're going to extend it just like that. So everybody sees that there we go. So at this point, when the market now is broken above our trend line, I'm now looking for buying opportunities. So very simply what I'd have to do, in fact, I've already done it here, let me delete that, is I would come in here, and there's my new low point, my new A point right there, the lowest of that new trend. I simply come in here without even have to figure out my A and B boundaries. So I just come in here and draw the Fibonacci's A, B here. Now, one of the things I just pointed out a second ago, if you notice here, the market, we have our A to B boundary. It hasn't pulled back. It hasn't pulled back yet to that top red Fibonacci yet. We're looking for at least a minimum pullback to this top red Fibonacci here. So here's what I'm looking at. As you can see here, the market came up. It's gone as far as our blue extension here. What we found is that when the market comes up to either the 1.18 or the 1.27 extensions here, and it hasn't hit our 0.382 retracement, what we're going to be looking for is the market to pull back. We're going to be looking for the market to pull back to at least this 0.382 and then go up. So here's what I'm looking for. The trade opportunity I'm looking for is I'm going to be looking for the market to eventually, and this is on the pound Australian dollar, for it to pull back to at least this 0.382. When it pulls back to this 0.382, I'm going to be looking for the opportunity to buy into the market. Look for those candlestick formations, or maybe look for it to bounce off the back of this down trend line here. I'm going to buy into the market, and based on assuming it's going to be a red retracement pullback, I'll be looking to hold my position until it comes up here to the red extensions. Let's just say that we find a buying opportunity right here at the 0.382, that first red retracement level. Now, let's say I buy into the market. That's going to be about a 215 pip move. Now, this is on a 2-hour time frame. Sometimes what I'll do, I like to trade on a 1-hour time frame. I like to trade on a 15-minute time frame. So what I'll do is I'm looking at it here on the 2-hour time frame. Sometimes what I'll do is I'll take this information, take it on, transfer it over onto a 1-hour or onto a 15-minute time frame and trade on a smaller time frame if that better meets my equity management here. So basically I just want to kind of go in here, show you a trade opportunity I'm looking at, kind of give you a little bit of the reasons why, some basic analysis as to why I'm looking to take advantage of this here. And some of you are asking some good questions here. Some of you just asked here, Pat's asking, does this fib tool work on stock and options? Yeah, that's another thing. We do have a stock and options program here at MTI. You can do the exact same thing here. These Fibonacci's, trend lines, all these, they work the same on stocks as well. So thank you for asking that, Pat. And actually, Jack was just asking, what's the best time frame does this work best on? Jack, one of the things we'll teach you is that you're going to look at the larger time frames. You're going to look at like a weekly, a monthly, or a daily time frame to kind of give you a better idea of which direction it's going. You can do the exact same thing on those, but I generally try to trade on a 2-hour, a 1 hour, or a 15-minute time frame. So hopefully that's answers some of your questions here. So yeah, okay, great. So I know some of you have some good questions. I'll try to answer them here as well, but I want to give you some basic analysis, show you some of the neat things about this. Now, some of you are asking about these rectangles here at the top of my screen. Here's another neat thing about our charting platform. These are called workspaces. As you can see here, I have different currency pairs for each one of these different workspaces. So I have all my analysis done per currency pair. Now, the neat thing about this is that these workspaces, you save them. You can save them to your computer. You can save them to your computer, or you can save them to the cloud. The reason for that is that, let's just say that you're like me. Maybe you work a lot off of a laptop. You can access your charts from the cloud. You can import them into your charting platform right from the cloud. Or if you're working on a different computer, like sometimes in the office I'll work on a different workstation, I can import all my charts directly from there. Now, the other neat thing about that, and that's going to tie into what I'm showing you here as one of the free bonuses you're going to get, Josh is going to give you a couple of these workspaces for free as part of this, and we'll show you how to actually import them and download them just like that here. So Edward's asking how to get the tabs represent the top. What you would do is you come up here. Okay, actually, you know, here's what I'm going to do, Edward. Since we have a little bit of time, this is the 3rd year anniversary for this, let me actually show you here. Here's what you can do. Add a new workspace. Now, let's just say here, I want to create a workspace here for the pound Australian dollar. So GBP, AUD. We'll call this II for investor inspiration. So there, okay, so now I have a workspace. What I'll do now is I can come in here, and I come into my charts. I just simply open up a new chart. Now, let's just say that I want to set up a workspace here on the pound Australian dollar. I would come up here, select pound Australian dollar currency pair, and then what I can do is I can come in here and select my time frame. So like I said, I like to trade on a 15-minute time frame, a 1 hour, a 2 hour. Like I said, we'll look at daily and we'll look at weekly. So let's just use that. Just select these 4 here. And then we also have custom templates. Josh is also going to give you a template as well, free template as part of this. Then he'll show you how to import that as well. So I come in here, and just like that, my charts will open. There we go. And I can simply come up here and I can organize them. So I have my daily, my 2 hour, my 1 hour, and my 15 minutes here. So I'll look at the daily for direction. And now come in here, I can look at some of my long ones here, sort of like on the 2 hour here. Now, I'm going in here, like some of you saying, well, which one does this work best on? If I were to trade this on that 2 hour, maybe my equity management doesn't line up best on the 2 hour. So what I can do is I can come in here to a 1 hour time frame or even on a 15-minute time frame, and I would do the exact same thing as what I just showed you here. I would come in here to the beginning of that new trend, come in here, and start my Fibonacci's from the beginning of that new trend. And at this point right here on my 15-minute time frame, this is where we are. And once again, we would have a red retracement pullback. Now, as far as equity management, like I said, if I were looking here for better equity management on the smaller time frame, let's just say I want to set my stop loss maybe about 10 to 15 pips below this U-turn. So 86, let's say we'll just say make this 76 right there. So my risk is going to be a lot less on a 2 hour time frame. And we'd be going after this one right here. Now, like I said, I'm looking for this to pull back as well. But just want to kind of give you an idea and show you some basic here if we were looking at that here. If I was looking to take this trade as is, let's see my risk. Let's say I were to buy when it breaks a counter trend line here. Let's say we're going to buy right there after it breaks that trend line. We'll say that my risk on this would be about 66. I'd be going after about 125. So this would be a 2-to-1 risk ratio. So even as is right here, that might not be too bad just like that here. So I know this is going to look off track. I know some of you are looking forward to getting into that London Daybreak trading strategy. So without any further ado, let's go ahead. Let's jump into the London Daybreak trading strategy here. So what I just showed you here is how to use some of the basic features. When you get the charting platform in your hand here today, you'll be able to play around with this, practice using that auto Fibonacci tool, the trend lines, doing some basic analysis. So for those of you that are experienced, for stocks as well. We're not going to be able to give you the stock feed here today as part of this, but for those of you that are interested in learning how to do stocks as well, we can do that just like that here. So let's just go ahead, let's minimize this here, and let's pull up those 6 currency pairs. Here's the 6 currency pairs on the pound, for the London Daybreak trading strategy here. I've already come in here, and I've already set these up. In fact, actually the trades, all 6 trades from yesterday morning, they were successful. They all moved at least 50 pips. I'll explain to you what that means here in just a second. But like I said, the London Daybreak trading strategy, this is the actual trading strategy you're learning in that video from Josh here when you take advantage of this. You're going to be doing this on the pound Canadian dollar, pound US, pound Swiss franc, pound New Zealand, the Kiwi, the pound yen, and the pound Australian dollar, the pound Aussie here. These are 6 currency pairs you'll specifically use for this one right here. As you can notice, each one is on a 1-hour time frame. I do believe Josh is actually going to be giving you a workspace that has all this already set up. So if not, you simply just open up these 6 charts just like I showed you there on a 1-hour time frame. But what I'm going to do is I'm going to come in here. I'll come back and I'll show you the trades from yesterday, showing how each one would have been successful here. But let's just go ahead and right now, let me show you here this trading strategy on the pound Australian dollar. I'm loving these pound pairs right now, my friends. I've been doing really well at trading them. We've been getting a lot of volatility off of them. So let's just go in here right now. This is the pound Australian dollar. I'm going to demonstrate this for you, but let me quickly explain to you how this London Daybreak trading strategy works here. The London Daybreak strategy. And you'll literally get these charts in your hands here today. You'll get to watch that video so that tomorrow when the markets open, you're all set up and ready to go. And I'll teach you here in just a second, show you how to open up a demo account so you can even just practice doing this through a demo account. Now, here's what we're looking for. What we're looking for, make that black. What we'll be looking for is we're looking for the market to form its initial high or low for the day. This is going to happen between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time. Now, what I mean by that is what we're going to be looking for is either for the market to pull back and form its low for the day and then give us directional movement bullish coming off of that, or are we looking for the market to rally up, hit its high, and then give us directional movement going down? So between 2 o'clock a.m. and 5 o'clock a.m. Now the reason for this, the reason we're looking for this is because during this time period you have the close of the Asian trading session and you have the opening of the London trading session. These sessions are going to overlap. What's going to happen is we're looking for the market to form its initial high or low during that period and then give us directional movement. Now we're also going to be looking for its opposite, high or low for the day. We're going to be looking for this between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. The reason for this is because during this time period you have the close of the London trading session and the opening of the New York session here. So what we're looking for is the initial high or low, and we're going to be looking for this directional movement here. They then look for its opposite, high or low for the day. Now the trading strategy I'm going to show you here is going to help us capitalize off of this directional movement. One more thing I need to point out before we jump in is what we found is that each one of these currency pairs has what's called its average daily trading range. Meaning that each one of these currency pairs, we're looking for it to move this direction a minimum of 50 pips. And it can go up and over 200 pips in this directional movement here. Just like that here. So what we're looking for, I'm going to show you here how to help identify this initial high or low, show you a strategy to get in and out of this market, taking advantage of this here. Now, our goal, as part of this trading strategy, like I said before we jumped in, my goal is to show you how to simply get 50 pips. We're simply going after just a minimum of 50 pips. I believe in the video Josh is going to give you and show you here, he's actually going to go in and show you here how to go after more. We'll utilize that by adjusting your stop loss. And I'll kind of give you an idea of how that works here in just a second. But we're going to be going after 50 pips. Now, to give you an idea of how much that would be worth, if you're trading in your mini lot account, in your mini lot account, each pip is worth about 10 cents. That would equal about $5. Oops, $5 in profit off of each currency pair per trading day. Sorry, that's the micro. Hold on. Getting ahead of myself here. Micro. Now you have your minis, your mini trading lots. That is $10. Sorry, $1 per pip. So that means that you're now looking at $50 of profit per currency pair per day, and a standard lot is $1 per pip. I'm sorry, $10. It's going to be $500 in profit per currency pair per day. So once again, I'm going to show you here how to set up a demo trading account, or if you want to go ahead and start funding your account and trading micros, I suggest trading with a demo first, become comfortable trading this trading strategy, then a little bit of money in your account, start trading micros, build it up, start trading minis, and as your confidence level and your account level builds, you'll get to that point, start trading standard lots here. So let's go ahead, let's go in right now, and let's start talking about this here. And like I said, we're looking in between 2 o'clock a.m. and 5 o'clock, we're looking for directional movement. So I've done it already, come in here, and here we have the directional movement coming off right here. There's our 2 a.m. candle coming down. There's directional movement coming off of that. That moved about 121 pips. Here's another one here. That's a 3 o'clock. That's 92. This one right here went up about 126. We have directional movement coming down off of this one of 101. Directional movement coming off of this, 74. And right here, the directional movement coming off of that is 37. Now, I just wanted to demonstrate this to kind of show everybody this directional movement here. The other thing I want to show everybody, explain to you, that some of you might be wondering, why does this happen? What we have found is that it's been said that during the European market, they are processing the largest bulk of the Forex transactions. So what happens during this period is they have a lot of the banks that are processing their orders. This provides a huge injection of volume and this directional movement. So what I'm going to do is I'm going to come in here and show you this trading strategy here to actually take advantage and capitalize off this directional movement off of these 6 currency pairs here. Now what we're going to do is part of this, we're going to be looking for the close. The close of the 3 o'clock a.m. Eastern Time candle. So effectively, you're going to be looking to start this trading strategy at 4 o'clock. It's the one, once again, each one of these is 1 hour. Each one of these candles is 1 hour. And I know some of you are probably already going to ask, well, why 3 o'clock a.m.? I think Josh goes a little more detail about that, but basically he's just determined that 3 o'clock is the candle that we're looking at for the best of these directional movement here. So let's go ahead. Let's take this to the beginning of the week. I'm actually going to show you the trades for this week off the Canadian and Australian. Then we'll come back and we'll show you the actual trades from all 6 from yesterday. But here's our 3 o'clock a.m. on Monday. I'm going to zoom in and make this nice and big. Right there. There's our 3 o'clock a.m. on Monday. Now, one of the things I'm explaining about, I'm going to come in here, I'm going to demonstrate, kind of give you a Cliff Notes version of this. Josh will probably come in here and go a little bit more detail, give you some little tweaks to this as well. But the first step, when we come to the close of that 3 o'clock a.m. candle, is we're going to come in here and we're going to set 2 pending orders. One pending order is going to be our buy order. And it's going to be an entry buy 10 pips above this high. So let's see, the high point right there is going to be, oops, where's my high point? So 21, we'll set this at 31. Right there. Yeah, somebody's asking, is there a checklist? You might want to take some notes, but you also get the video of this. You'll get the video from Josh where he's going to go a little more detail. But what we're looking at here, this is our entry buy pending order. This is going to be plus 10 pips above the high. And somebody just asked here, do we mean the high of the candlestick wick? Yeah, the candlestick wick is our high point. Entry buy, 10 pips above the high. Now we're also going to set an entry sell position, 5 pips below the low. So we come in here, 1, 2, right about there. Another pending order, this is our entry sell. It's going to be minus 5 pips below the low. And some of you probably already asked why 10 pips above, why 5 pips below. I think Josh goes into a little bit more detail about this as well. So the first step is that right there. Now, the reason I'm setting this all up like this is if you remember, there's 3 questions we need to answer. Number 1, where is the market going? And using this simple trading strategy is going to help us answer that quickly here. And then I'm going to show you here where to get in, and then where to get out with a very simple trading strategy. So I just answered question number 1. We're going to use this step right here to help us determine which way is it going. Which way do we believe? Give us an educated opinion. We believe that market's going to go. So watch what happens here. We have our entry order set here. We're not in until the market triggers. Let's see what happens here. 1 hour later, within the next hour, the market rallies up, triggers our entry buy. So what that means is that our entry buy right now is now a market buy. Now what I mean by that is that when it gets triggered, it's now giving us that educated opinion saying, hey, we believe that we're going to get that directional movement going up in a bullish movement, just like that. So we bought into the market here. Now, the first order of business when we get triggered is to close out our opposite order. We don't want to sell the market because we don't believe that the market's going to be going down. We believe it's going up. Now the next step, after you cancel your opposite order, we're going to come in here and we're going to set a stop loss. Now, the stop loss is going to be a little bit different when you're buying versus selling. When you're buying into the market, the stop loss is going to go at the low. Oops, I'm sorry, at the low of our 3 o'clock. Sorry about that. Actually, go right there. Now I'll type that out as well. Stop loss when buying is going to go at the low of that 3 a.m. candle. So our stop loss is set, and our next order of business now is going to be what our target is going to be. So in this case right here, on this trade, we're risking about 23 pips. If you remember, I just told you here a couple of minutes ago that our goal is to go after 50 pips. So our first base is going to be 50 pips. So what we're going to do is set our target and our limit. Where we get out of the trade. Now, that's going to be either one of two things. It's either going to be a 1-to-1 risk or minimum of 50 pips. So in this case right here, we're risking about 23 pips, so we're going to go after that minimum of 50 here. Like I said, Josh will go in that video, he'll fine-tune this a little bit on this here, but we're just going to go ahead and we're going to go after 50 pips. Let's go ahead in here. We'll set our target at 50 pips. And yeah, someone's just asking about this tool I'm using here. This is our measuring tool here. It's our ruler tool here. If you look in the upper left-hand corner of my screen, you can see the range. That's the amount of pips. There's 50 right there, so that's going to be at 60.82. Right there. So we have our entry, stop loss, target. We're set up. Now, I saw some of you are probably thinking here, well, do I have to get up at 3 o'clock a.m. to trade this? When you start seeing the results here, ask yourself, would it be worth it to get up at 3 a.m. to do this type of trade? Now, the other neat thing about this is that right now our trade is set. All this is set in our broker's platform. We literally can simply go back to bed at this point here. But let's go ahead, let's see what happens here. The market rallies up, pulls back a little bit, and bam. So this one took, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 12 hours later, it does in fact go up. Sometimes a little bit quicker. Sometimes in this case it took 12 hours, but we did in fact go up and we did capture those 50 pips right there. So not too bad. On Monday, simply just using this trading strategy on the pound Australian dollar, you just captured 50 pips. Not too bad. Now, a little bit of profit on a mini, that would have equaled $50. On a standard lot, that would have equaled $500 in profit off of that first trade right there. There we go. So there's Monday. Let's go ahead, let's now advance this. Let's delete all this here. And let's move this now to Tuesday. It's the next 2 o'clock, or the next 3 o'clock. And right there, bam. Just like this. You know, some of you here we're asking some questions here. Well, what if I think somebody just asked here about what happens if the trade doesn't get triggered here, or the limit doesn't get triggered here. That's something I think Josh goes in the video. He goes in a little more detail, kind of giving you an overview of if we don't hit our limit by the next day, how long you should hold your position. I think he goes in a little more detail about that as well here. So yeah, that's the thing. Yeah, like Giselle says right here, once you simply set all this up in your broker's platform, you simply can walk away and go to bed. So all you're simply doing is you're waiting here. Now here's the 3 o'clock a.m. on Tuesday. doing the exact same thing. We wait for the close of that 3 a.m. candle. We come in here, and we're going to set 2 pending orders. Now we have this one's going to be 10 pips above this high, so 32, it's going to be 42 right there. And we have our sell, which is going to be 5 below, so 1, 2, 3, right there. Now I'll type this out. I know we still have a little bit of time here, so we have our entry buy is going to equal plus 10 pips above the high, and we have our entry sell. It's going to equal minus 5 pips below. Now, what I'm showing you, once again, this is simply just a Cliff Notes version of this trading strategy. Josh goes in a little more detail about this. In fact, he's even going to show you here on certain days when you might not want to take the trades. He goes into a little bit more about that as well. So let's go ahead here. There's our entry buy, entry sell. Here's our 3 o'clock a.m. candle. Let's see what happens here. So 1 hour later, bam, the market comes down, triggers our entry sell, giving us that educated opinion that we believe that the market's, that directional movement is going to be going down. Oops. Give me a second here, my friends. They're working on our charts this weekend. That's why we have this going on. I apologize for this. Yeah, that's one of the things here. They're actually updating our charting platform over the weekend. So I've never had this happen before, but I guess because they're doing that, that's why it did this year. So let me see if I can get out of this. Let's see if he's gonna let me get out. Okay, let me see if I'll quickly open that back up again. I apologize for that. Let me see. Hopefully, I'm hoping we're going to be able to get in. Like I said, they're working on our charting platform. They're updating it this weekend. Okay, let's see. I think I'm getting back in. Now, officially, yeah, exactly. A bad time for updates. We have to let them know if they're doing this. We need to start doing this when we don't have these presentations going on here. So there we go. Normally, to be honest, my friends, the charting platform hardly ever crashes like this. So it's rare that it would be doing this. So let's go ahead here, and let me pull this back up. Okay, so we go ahead. And so once again, I have all my workspaces set up right here. All I have to do is just come back to my workspace, pull my chart up, and we're back in the game here. So, oh, there we go. Nice. So it basically saved it right where we were. So here we are. So I think that's where. Hold on a second. Let's see where we're at here. Oh, okay. So we're okay. We're doing okay. Just let's quickly get back to where we were as far as. In fact, actually, here's where we go. I'm gonna go ahead and just go quickly advance this here to. Where we were. Okay, this is our 3 o'clock. Oh, that's 1, 2, and 3. So we had the market advance. We got triggered 5 pips below that low. Just got to go ahead and utilize these lines I have on here right now. So what did I say? 14. So this needs to be at 0.9. So at this point, we got triggered. Remember, we got triggered here. Now we had an entry buy that was 10 pips above this high. So that's 32. We'll simply set that at 42. So first order of business, we're going to cancel that. We're not looking to buy the market because we're looking for the market to go down. We're looking for that directional movement going down based off of, oops, is it going to do it again? There we go, okay. So yeah, we're looking for that directional movement going down. Now, what we're looking to do is we need to come in here, we need to set our stop loss. Now it's a little bit different here when we're selling the market. Our stop loss is going to be going 5 pips above the high. So we set this at 1, 2, 3, 4, 5, 6, right there. And I'll go ahead and I'll type that out here. It's a little bit different than the last trading strategy we did here. Stop loss when selling is going to be plus 5 pips above the high. Once again, Josh will go in. He'll probably explain this a little more detail, explain to you why it's 5 pips above the high right there. So we have our entry. We have our stop loss set. Let's see what our risk is on this. Our risk on this trade is 28 pips. What's our minimum? 50. So let's go ahead and let's set our target here at 50. So it's going to be at 59.58. Right there. And I'll type that out for everyone once again. Our target, which is our limit, our automatic exit when we hit that, is going to be either 1-to-1 risk. In this case here it was 28 pips, or minimum of plus 50 pips. So in this case here we're going after 50 pips. So let's see what happens here. There's our entry, stop loss, there's our target. Market pulls back, we don't get stopped out, but then right there, bam. So this was what? 1, 2, 3, 4 hours later, market comes down, hits that here, and we just captured another 50 pips here. So not too bad. On Monday, we captured 50 pips. And on Tuesday, we captured 50 pips. And I'm going to do, I'll bring this quickly to the live market, or the current market. Let's delete all this. There we go. And let's see what happened here the rest of the week. So on Monday and Tuesday, 50 pips and 50 pips. So here is on Wednesday. There's Wednesday. Now watch what happened here on Wednesday. I could have showed you guys this one, but look at this. Here's our 3 o'clock a.m. Oops. There was our 3 o'clock a.m. on Wednesday, and it went up 170 pips. So Josh will come in here. He'll show you how you might be able to raise your stop loss up, be able to move your limit up as you're going up here to start locking in profit and to lock that in as well. So yeah, we're going to show you how to go after a minimal amount of pips. We'll even show you how to go after some as well. So this brings us down to Thursday. There's Thursday right there. Small movement right there. What about, okay, 78 pips off of that one. Directional movement off of that one, not too bad. And then I think this is yesterday. So here is yesterday, Friday. Had you taken this trade yesterday? There's our 3 o'clock a.m. candle. This one moved 70 pips. So you would have gotten your 50 pips off of that one. As I mentioned here when we jumped into this at the beginning here, each one of these moved at least 50 pips yesterday. So on the pound Canadian, let me see if I can zoom in here a little bit here. There's our 3 o'clock, it moved 50 pips. The 3 o'clock on our pound US dollar yesterday, it moved at least 50. There's our pound Swiss franc, it moved 50. Our pound New Zealand, it dropped down 50. There's our pound yen, it dropped 50, and of course our pound Aussie just like that here. So what I want to do is I'll explain to everybody here is, yeah, with this London Daybreak trading strategy, I kind of gave you the Cliff Notes version of this. You're going to get that video from Josh. He's going to go a little more detail here, being able to show you a little more detail to fine-tune this a little bit and be able to go in just a little bit like that here. So once again, this is on these 6 currency pairs going for 50 pips per day. So just with just this trading strategy, it's going to give you 5 times on each currency pair per week. So you're going to have 30 opportunities per week utilizing this trading strategy. So think about that. Even if you just maybe took advantage of 1, 2, 3 of these, get 50, 100, 150 pips nets throughout the week, just with a simple trading strategy. Like I said, the video you're going to get here today, Josh is actually going to show you this in much greater detail. So I'm going to actually show you here, like I told you at the end of the webinar, I'm simply here to demonstrate the charting platform, show you a trade that we're going to get into, teach us trading strategy, but we're going to give you a trial on this charting platform. And I'll give you a video training on how to use the charting and a training on how to do that London Daybreak trading strategy. If you stick with me here to the end of the webinar, I'll show you how to set up a demo account so you can literally get all this in your hands here today and start practicing doing this when the market opens up tomorrow. So as part of the Ultimate Charting software, you're going to get everything I showed you here today. That Auto Fibonacci tool, the Auto Trendline tool. I didn't get the chance to show you the King's Crown tool. You're going to get those candlestick tools. Another thing I didn't get a chance to show everybody. Let me go ahead and jump back in here for 1 second. Let's just go back to my pound Aussie here. Is there some of you are saying, well, do we have to like sit in front of our charts waiting for the market to? Actually, let me go back to my 15-minute time frame here. Let's just say that we're trading on the 15-minute time frame on this one right here. And like I said, what if I'm waiting for the market to break above this counter trend line? But I don't want to sit around waiting for the market to break above. Here's what we can do. We simply right-click on this line, add an alert. The charting platform, when the market breaks above, we can have this cross above. It'll send us a new alert. And the neat thing about this is that you can go ahead, oops, I close that here. You can either have this send you an email alert or a text message. Literally send a text message right to your phone letting you say, hey, the pound Australian dollar is breaking above that trend line before here. So let's go ahead. Let's jump in here. Let me show you here how to actually get this here. And we have all this right here. Let's go ahead and this is part of your 14-day trial. I'm going to show you how I can get all this for a 14-day trial here today. And actually, like I said before, you don't have to be a student of Market Traders Institute to actually get a hold of this here today. If you were in Joe's, my colleague's webinar earlier here today, you'd have to become a student of Market Traders Institute, go through a full education, get advantage of this here. For those of you that simply want to take the charting platform for a test drive, to get that video from Josh, those free workspaces and everything I showed you here today, take it for a test drive before you actually go through the entire education. Here's something we're going to do. You don't have to be a student of Market Traders Institute to get this in your hands here today. And normally, if you were a student, our students have to pay $249 a month of a subscription to get advantage of that charting platform. Here's what we're going to do here today. To get this in your hands, we're going to allow you to take it for a test drive for $1. Literally, I'm going to send out a link right now. Send this link out to everybody here in the room. Send that link out. You click on the link, register for this trial. You get 14 days of the charting software, and you're getting access to everything I showed you here today and more. I'll go over a little bit more of this here today. Now, the neat thing about this is that for $1, you get to take all of this for a test drive. At the end of the 14 days, you decide you want to go ahead and cancel. I'll show you how easy it is to cancel the subscription. Or if you choose to keep it, we'll lock you in. It's only going to cost you $59 a month as part of the Investor Inspiration Special here today. We do have a couple free bonuses. I'll show you them here today. So I just sent a link here to everybody here in the room. Yeah, some of you have some good questions here. I'll try to come back in here and answer them here in a second here. So I promise I'm not avoiding you. I'm just about to run out of time here today. But yeah, so you click on that link I just sent out, and let me walk you through the process. I'll take you behind the scenes and show you what all you're going to get as far as this here. So let's go ahead. Let's go through the process. Step number 1. Enroll in the charting software trial. You click on that link, and I'll show you how to fill that out here in just a second. Now, you're going to get video training lessons here. In fact, let me go ahead and let's start pulling some of this up here. First step is you click on your link, activate your 14-day trial. Type in all your information, and you activate your trial. You'll probably get 2 different emails. You'll probably get one email that's going to let you know that you are, in fact, registered for this, and you'll probably get another one with all your login information on how to download the charting platform and get access to everything here. Now, you're going to get access to this back-end portal here. The back-end portal, you'll get a link for this. You'll be able to log into this. You're going to get video lessons showing you how to use the charting platform here. Josh will go into detail showing you how to set up a demo account. I'll give you a couple examples here how to set one up here in just a second. How to get those free workspaces. So go in here and show you how to get those 3 free workspaces. We'll show you how to use the Fibonacci's. Show you how to use some of the settings on here, the toolbars, custom indicators. I didn't even get a chance to show you the custom indicators that are built into our charting platform. We'll go into more detail showing you how to use those auto Fibonacci tools and those other tools. How to link your account to your broker, how you can actually trade live right from the charting platform. We'll show you how to back everything up. Show you how to back up those workspaces, back up all your indicators and everything right onto your computer, how to actually create your own system, how to auto trade. I didn't even get a chance to show you how auto trading. We'll teach you and show you how to do auto trading and so on here, how to navigate all this right here. There's going to be a live webinar next Friday. It's going to be a training webinar where you'll get this in your hands here today, get to practice with it throughout the week, and then on Friday you'll be in a live webinar with either myself or one of my colleagues. You can ask them questions. If there's some questions about certain different things, ask them live right in the webinar just like you're interacting with me here today. And you're going to get the London Daybreak trading strategy video right from Josh. This is coming right from Josh Martinez, the creator of this trading strategy. He'll fine-tune this a little bit for you. Like I said, he'll come and show you how to go after more than 50 pips. He'll even come in here and show you on which days maybe you shouldn't take that trade. I'll go into more detail right from the creator of that right here. Now, for those of you looking to set up a demo account, let's come back in here just a second here. You'll go through those video training lessons, the charting, London breakout. Right after this webinar, after you enroll in the program, you'll be able to go ahead and start doing those training lessons. Now, you'll also set up your trading account. Let me go in here and explain to you how that works here. Now, some of the examples here are FXCM, that's my current broker. I've used Forex.com, some of my colleagues use Oanda. What you're going to be looking for, you simply do a Google search looking for brokers that have demo trading capabilities. So let's come back in here. In fact, here's FXCM. Let me show you how easy it is to set up a demo account here. Click on Practice Account to take you to this page. Set up all your information. You don't have to enter any credit card information. You simply just go ahead and get started, and you can set this up, and you can literally go ahead and start trading how to do this just like that here. So that's how you set up a demo account, or like I said, you can go to Forex.com, Oanda, just like that here. Now, tomorrow at 5 o'clock, Sunday at 5 o'clock p.m., the Forex market opens back up. You're going to have the charting platform. You're going to go through those training videos. You'll have that London Daybreak trading strategy. So literally tomorrow, you're going to have everything you need to, if anything, start trading the Forex market with a demo account. You'll have the charts, some trading strategies. You'll be ready to go in and start taking this for a test drive here for the next 14 days. So you try it out for the next 14 days. If it works great, continue. It's only going to be $59 a month, locked in. It's on a month-to-month basis. There's no long-term contracts. You don't have to sign any contract. It's just simply be on a month-to-month basis. Like I said, there's going to be that live training class each and every Friday. So if as you're going through, if you have any questions, you can ask one of my live analysts how to do this. And I'm going to show you the 800 number here for our customer service if you have any questions while you're doing this as well. So that's our guarantee, is that we guarantee that over the next 14 days you'll find the value in this. If for any reason you don't find the value in this charting platform, learning how to use the charting platform, these strategies I'm showing you here today, simply just cancel. It only costs you $1 to take it for a test drive. You decide to go past those 14 days, we'll get you locked in with that Investor Inspiration Special. Once again, it's $59 on a month-to-month basis. So what I'm going to do is I'm going to go ahead. I'm going to see if I can go ahead and start answering some of the questions here. But for those of you that would like to get our customer service number, so you're asking for that link. Let me go ahead and send that link out again. Here's the link. You click on that link. It gets you enrolled into this program here. But here's the 800 number and our customer service number. I do believe we have customer service open on Sunday. So as you're playing around with this here today, tomorrow if you have any questions, you can give our customer service a call. They might be able to answer some of your questions as well. Now here's one of the neat things about this. In fact, actually Rick just asked a good question here. Rick's is the most recent one, so I'll start off with Rick's right here. Rick says, why can't I just use FXM or Oanda's charting platform? Because ours, Rick, to me, it's the Rolls Royce of charting. I mean, if you go on to like FXM or Oanda, the thing about it is that we have a lot of these built-in features. The only thing about this is that we have some of those auto trading tools, and we do have the ability to do the trading right from the charts as well. So once again, if this is something that's interesting to you, being able to learn how to use these charts that all of our analysts here use, we're actually putting this in your hands here today. So yeah, Mikey's asking about accounts here. Bob's asking about Options Express. Bob, that's something you can use whatever broker you want. We do not promote a single broker. In fact, I use FXCM. I'm not saying to use FXCM. I'm not saying to use any of these here. I'm not allowed to say, hey, use this one. You can use whichever one you want. I just prefer FXCM, so you can use whatever broker you want to use. Mikey's asking about the accounts for the account. I believe that's what you're asking here. Mikey, that depends on what account size you would like to use. With a with a micro lot, you could probably get away only putting in maybe $50. A mini lot, you're going to need a little bit more than that. And of course, a standard lot, generally, you'll probably need at least $5,000 in your training how to do a standard lot. But we're going to go ahead and do that here. Rick's asking, how do I view Josh's video? Rick, you'll have to register for this to get Josh's video as part of this. That's part of the program here today. So what I'm going to do is I'm going to wrap this up. I want to thank Investor Inspiration for allowing us to come here today. Let me see if I can answer any more questions here. Let me see here. Brian's saying here about spread number of pips. Yeah, Brian, what I just showed you here is a very basic Cliff Notes version of all this. Once again, that's per your broker, depending on what the spread's going to be per trade. I just want to come in here and show you that. I think Josh might even go into a little bit more detail about that as well. Let me see here. William's asking about Mac or an iPad. William, if you have the charting if you have an emulator, a Windows emulator on your Mac, I think that's the only way you can run the charts on there. We do have an online version of our charts. What I would suggest you do, in fact, let me go ahead and back this up a second. I'm about to wrap this up. I'm about to run out of time. If you have any questions about Mac versus PC, anything else that I might not get to here today, give us a phone call tomorrow. Send us an email. I'm sure that we will have one of our customer service guys. They'll go into much greater detail, walking you through, showing you how to set this up, letting you into some of the more details here about some of these questions here. Somebody just asked about the stock feed here. This is only for the Forex feed. We do have a stock feed, however, it's not part of this. It's only for the Forex. If you're interested in getting that stock feed, once again, call customer service. We'll be able to help you out with that as well. So what I'm going to do is I'm going to stick around here for about 1 more minute. What I'm going to do is I'm going to bring this up here. This is our special here for investor inspiration. For those who want to take advantage of it, $1 to take the charting platform. There's live sessions here. Yeah, those of you asking about that, yeah, everything's included here. These lives, these videos here, these training videos, you'll get access to each of these training videos. That the London Daybreak trading video, where Josh goes a little more detail about this, you'll get access to this as well. That live session coming up on Friday, each and every Friday, you'll get into a live session with that. And I think that covers it here. So on that note, what I'm going to do is I'll stick around here for about 1 more minute, trying to answer some questions. Some of you asking me to send that link out one more time. I'm sending the link out to everybody here in the room one last time. If you're having trouble with that, give our customer service a call, or let me know if you're having trouble. I'll see what I can do as far as helping you. But yeah, you're going to get everything I showed you here today for that $1 trial. Those of you that are having trouble, there's the link right there. Simply, what you can do is you can type that into one of your browsers. It'll pull up for you. So once again, 3 years with Investor Inspiration. We've been doing this here. I've done several hundred of these. So welcome those of you that joined us here today. So thank you, everybody. Look forward to the next one we're going to be doing here. I always enjoy coming out and talking to traders just like that here. Maj is asking here, how do you get access to the indicators? That's something. In fact, let me answer. Let's see if I can answer that one more time. And some of these indicators here, they're built into our charting platform. Let me see if I can pull that up very quickly here. Now, here's the tab for the indicators. Let me see. But anyway, this is where indicators are, and then you'll get access during that video here, just like that. So let me go ahead and wrap this up. Okay, so on that note, I'm getting kicked off, my friends. I've run out of time, so thank you, everybody. I'll leave this up for about 1 more minute. So on that note, I want to wish everybody the best in your trading, and those of you starting out today, I wish you the best starting trading the Forex market tomorrow. Going through this process. So thank you, everybody. I wish everybody a good weekend and the best in your trade.